Morning, and thanks for having me. Let's maybe quickly reflect on last year. We grew our revenue by 5.5%. We grew our profit by the low single digits. We had strong profit growth in our two most important regions, the Europe region, the Americas region. So overall, we're proud of the results, and it shows the resilience of our footprint under challenging circumstances. We are guiding for next year low to high single digit, slightly different from how you just introduced it. We are deliberately coming out with a broader range, given the volatility that we still see globally. But for sure, we see the volume momentum improving sequentially quarter by quarter. And with much less pricing needed in this new year, we do expect our performance to improve in 2024.
Dolf, people always, look, going to the pub, let's be brutally honest about it, has perhaps never been more expensive in some ways as well. Is that being offset by the off-sales market?
Bizarrely, last year, actually the on-trade business performed somewhat better than the off-trade business. I think it's a reflection of a lot of that pricing that was needed due to a huge increase in our input cost. Input cost per hectoliter went up double digit last year. But gladly, we really see that coming down in the new year. We're guiding to low single-digit increases, which is materially different from what we saw in the recent past. As such, as I said before, much less pricing needed. We see inflation around the world starting to moderate. And we do think that will set us up for a very different volume momentum in this new year.
Dolf, good morning to you then. Can you still pass on price increases to consumers in the kind of environment we're in now?
Yeah, I think, what's most important, you need to earn the right to pass on pricing, because in the end of the day, the consumer decides. And as such, again, we see much less pricing needed in the new year. We have closed our negotiations with our customer partners, particularly in an important region like Europe. So we do feel that normalcy, let's say, is returning. And that's really important, because in the end of the day, growth is our most important value driver, and we're really prioritizing this in the new year.
So where do you get that growth and perhaps margin growth as well? Is that in the form of cost cutting or perhaps regional expansion?
It's always two things. It's really driving your top-line growth. As such, by the way, the name of the company is also our proudest brand, the Heineken brand. It did grow last year, up 3.4% globally, growing in almost 40 markets, double-digit growth in 20. The brand was growing 50% in a critical market like China, now the second largest market for the brand. So one is really drive top line through our key brands in our key geographies. Brazil, a very important market that continues to do very well for us. But indeed, productivity gains are very important to really do our part of offsetting the input cost inflation that was there. And we over-delivered against our own plan. We got around 800 million euros of productivity savings last year, which was material in generating operating profit growth organically last year.
Yeah, you speak about Brazil, and I want to focus on that EM space a little bit. It's been some time since you acquired Distell as well as Namibia Breweries last year. Have those been fully integrated, and what's the benefits that you're seeing out of those markets right now?
Yeah, so very proud that Distell is now part of the Heineken company. We see good momentum on the underlying Distell brands. The Savannah brand was up mid to high single digit, Bernini up double digit, Old Buck was up double digit. So the core brands of Distell performing very well. The majority of the integration, the key integration of systems and sales force and trade terms, I think is now behind us. We're in the high selling season, and again, very bullish about the prospects of this business going forward. And you know, one of the things that we're proud of as Heineken is our broad global footprint with a good balance between developed markets like in Europe, as well as emerging markets, key markets like Mexico and Brazil, which continue to do very well for us.